In the United Kingdom, nearly every politician claims to support small businesses and growing the economy. They talk about entrepreneurs and the backbone of the economy, and how we need to level up regional development. But behind the slogans, it's really quite different. Today, most small and medium-sized businesses struggle to find affordable finance, regional banks are almost non-existent, vocational training is patchy, and the infrastructure meant to support local economies, well, it's often underfunded, overly centralized, or it's just not there. In 2023, UK SMEs generated £2.4 trillion in turnover. That's more than half of all private sector business activity, but there's a major problem. SME workers in the UK are significantly less productive than their G7 counterparts. In fact, based on the latest data from NatWest, UK SME employees generate approximately £147,000 of output per year, while their German counterparts produce £335,000 a year. If UK SMEs match German productivity levels, we would see a £1.2 trillion boost to our economy. That's more than the entire GDP of countries like Spain and Australia. Now, improving productivity isn't about working harder, it's about smarter systems, better infrastructure, and investment in skills. And if we get it right, the payoff could be enormous. But what if there was a way to solve all this? A system specifically designed to support small and medium-sized firms, one that combines local public banks, a national development bank, strong vocational training, and smart industrial strategy, not as an afterthought, but as the foundation of economic growth. In this video, we're going to explore the first part of a plan to rebuild the UK economy from the ground up. As the issues run very deep, this will be an ongoing series. But to start, we need a strategy that's practical and affordable. So, why do small businesses struggle to grow in the UK? What if we were to rebuild our economy from the ground up with SMEs at the core? Could local banks fix regional inequality? And what would a UK public bank for national development look like? If all this sounds interesting to you, make sure to like and subscribe to help the channel grow. So why do small businesses struggle to grow in the UK? SMEs in the UK face serious challenges when it comes to growth. And it's not because they lack ambition. One of the biggest issues is access to the right kind of funding. Most private banks are risk-averse and heavily centralized, making it hard for local businesses to get long-term loans or investment tailored to their needs. Capital is mostly focused on London-based tech startups, chasing quick returns, while businesses outside major cities often get overlooked entirely. On top of that, there's a major skills gap. Many SMEs struggle to hire the talent they need, especially in manufacturing, engineering, and digital industries. Our apprenticeship system is weak, and there's not enough to support the kind of skilled workforce that helps a business scale. Infrastructure doesn't help either. Poor transport, slow broadband, and the highest energy costs in the world hit smaller firms much harder, especially in rural or post-industrial areas. There's also a real lack of coordinated support. Policy changes are too often, public procurement rarely favors smaller firms, and exporting is more complicated than it needs to be, especially after Brexit. SMEs don't have large legal or compliance teams to handle endless red tape, so they often just play it safe instead of expanding. What's missing is a national strategy that truly supports growth, one that gives SMEs access to reliable funding, better infrastructure, export support, and a long-term policy environment they can trust. This strategy will be split over 2 or more videos. This first one will focus on SME support and creating a public banking system in the UK, and the next one will focus on the business environment, such as a chambers system and vocational education. So, let's solve this. First, let's change the laws around inheritance tax relief for family-owned SMEs. The UK has something like this already, but here's the condition. They must continue to operate and preserve jobs for at least 5 to 7 years. In return, they could receive an 85% reduction for a 5-year deal, or 100% tax relief on a 7-year deal when ownership is passed down through family. That would stop viable businesses from being sold off just to pay tax and ensure smooth generational transitions. But that's just one part. We also need a stable and predictable tax environment so these businesses can play long-term, not get dragged down by short-term financial firefighting. Let's create dedicated R&D institutes for SMEs, physical hubs where small businesses can tap into cutting-edge research without having to build expensive in-house teams, like Germany's Fraunhofer Institutes. We can expand digital grant schemes for high-risk industry-relevant research. And yes, keep the current tax credits, but complement them with grants targeted specifically at commercializing new technologies. We also need digital transformation centers. These would be one-stop shops giving SMEs free consulting on digital maturity assessments, hands-on help with adopting AI, robotics, e-commerce, and anything else they need to adopt to reach proper modern digitization. These next 2 will be fleshed out more in the next video, but we need regional innovation clusters. We connect SMEs with universities, large companies, and local government. And finally, we boost export promotion. That means subsidies for trade fairs, export credit guarantees, and tailored insurance products designed for SMEs. Plus, a dedicated incentive to help small businesses navigate post-Brexit trade and expand globally with practical support every step of the way. A few other reforms could be raising accounting and reporting thresholds. In Germany, this saved 2 billion euros a year. A one-in, one-out rule, so any new regulation cost on an SME must be offset by taking a cost away from somewhere. Formal SME tests, so every new law is screened for its SME impact. Exemptions or simpler compliance must be considered. We can reform public procurement, so contracting authorities must split large tenders into smaller lots, use e-procurement and simple pre-qualification. SMEs need to be paid within 30 days. We could say reinvested capital gains stays tax-free. We could give the R&D tax credits up to 3 million a year. The UK has similar versions to some of these, but none of them go far enough to move the needle. It's a total ecosystem transformation we need, and a policy here and a policy there isn't going to cut it. So to continue, we could also make R&D institutions, like a central innovation fund for SMEs. It could be a rolling grant scheme. No sector walls or no gatekeeping. It would give around 700,000 for solo projects and up to 3 million for cluster bids. The process would have to be quick: a 48-hour eligibility pre-check, 25-page full bid, and a verdict within 8 weeks. The process for these grants would look something like this. The planned product, process, or service must significantly exceed existing solutions in its functions, parameters, or features, and at least be in the experimental development stage. You must show genuine technical risk. Routine upgrade products are knocked out. Novelty is measured against the international state-of-the-art, not just UK peers. A credible exploitation plan. Target customers, market size, time to market, IP and standards route, revenue, job forecasts. The project should open new market opportunities and contribute value creation for the firm. The applicant must maintain a permanent establishment in the UK when the grant money is paid. The exploration plan must show that substantial value is added inside of the UK, like production, service delivery, licensing income, or job creation. Licensing and sales abroad are absolutely fine, as long as the majority of the economic benefits land mainly in the UK. This matters because the UK has something similar to this called Innovate UK, but it has a 3% hit rate, whereas Germany's, which follows a much similar system to this, has a 60% rate. And this is just policy change. This is something we can do today. We could have an SME Fast program, a fast lane program for high-risk R&D by small and medium-sized enterprises. We could have an SME Fast grant, a fast lane program for high-risk R&D. Twice a year, say April and October, firms can submit a concise 10-page outline under one of 10 prior technology tracks that the government gets to choose, like AI and data, biotech, quantum, clean energy, agri-tech, advanced material science, space and robotics, etc. Proposals that clear the technical risk and market potential are invited for full application, and final funding decisions arrive roughly 4 months after the initial deadline. Grants would cover up to 50% of industrial research costs, and there is no formal upper ceiling, so single awards can reach or exceed £3 million if justified. Universities and research institutions may join, but an SME must lead and retain most of the budget. This would be designed for ideas that are too risky for conventional finance, because this scheme weighs scientific novelty and commercial traction equally. We could also do something like an industrial common research fund, where pre-competitive research is paid for by the state but steered by industrial associations. Picture, say, a consortium of 100 tooling firms who all need a breakthrough in wear-resistant coatings. The research fund would then fund university lab work, and the results are shared with the whole branch. Smaller firms would love stuff like this because they can get access to leading-edge findings which they could never finance on their own. And if you think these things would be too expensive, Germany, whose productivity we want our SME workers to match or exceed, has similar institutions, and they spend around 925 million euros a year. That's 790 million pounds. That's well within our budget. Considering we already have R&D programs, we would just need a little bit extra, and then to change how the money is given. So yes, it is affordable. Now, in my opinion, this reform is so important, and it would go such a long way in reducing regional inequality in the UK, and that would be a UK public banking system. So we need a different kind of bank. One that keeps local money working locally and puts public interest before private profit. So, we should establish regionally focused and public-owned community banks with a clear geographic mandate, so they can only lend to people and businesses in their area. Their mandate would be crystal clear: only local lending, and especially to SMEs, households, and public projects. We also need to bring back real relationship banking. That means shifting lending decisions closer to local branches, where managers know the businesses, understand the risks, and can make judgments that go far beyond just credit scores. SME relationship managers should visit the businesses, understand their model, and factor in the story behind the numbers. This trust-based kind of banking has been missing for far too long. So, when a local manufacturer needs a loan to expand, or a startup wants to hire its first team, these banks are ready. They know the area, and they know the people, and they're built to support the real economy, not financial speculation. So, say we've built a foundation of local community banks that keep money circulating where it's earned. But these local banks can't operate in isolation. They definitely need something bigger behind them. And that's where regional banks come in. These are regional wholesale banks designed to power the entire system, providing liquidity, infrastructure finance, and strategic lending to unlock growth at real scale. Regional banks would serve three key roles. Backbone banks for community lenders. Regional banks would serve a key role. They're capital market connectors, linking regional projects to national and global funding. Every regional bank should operate under a legal charter that locks in its mission. 70% of lending must be within its region. There should be a focus on SMEs, housing, infrastructure, and green tech. No speculative finance, no profit maximizing behavior. Loans can be measured by public good criteria like job creation, community development, and regional impact, not just on profit. Each regional bank would be co-owned by two parties 50-50. Regional governments, like combined English authorities, the Scottish government, the Welsh government, and the community banks in the region it serves. This ensures accountability, local control, and shared responsibility for the risk. They will work with local councils, devolved governments, and regional cluster strategies to target investment where it's most needed. They will also partner with the National Development Bank to channel large-scale capital into regional projects, aggregate SME lending, and fund national priorities. These regional banks will use the on-lending model. So they lend through other banks, like the community banks we spoke about, or current private banks. So let the frontline banks handle customer relations, credit scoring, loan servicing, but the regional banks support the community banks with liquidity, co-lending for larger projects, treasury services, foreign exchange, and back office functions. So everyone has a role. Community banks focused on retail lending and SME relationships. Regional banks focus on wholesale, regional, and strategic finance. And the national bank will focus on long-term capital and planning. Talking of development banks, on the same level as our regional banks, we should also have regional development banks. Now, I'm sure you know what a national development bank is, and I have a plan for one later, but these will be regional versions. Regional development banks are not just lenders, they're delivery arms for public policy. Think of them as the financial operational wing of regional and national government goals. They don't compete with commercial lenders like our other banks. They're not in it for the profit. They're literally only in it for the public good. They exist to fill gaps in the market, places where communities, councils, or businesses need affordable finance to deliver essential projects. Their mandate should be written into law, publicly owned, non-profit, and governed by development goals, not shareholder returns. These banks won't rely on customer deposits. Instead, they're funded by initial public capital from the government, long-term bond assurance, loan repayments cycled into new lending, on-lending from the National Development Bank, and access to international development funds. Because they carry public guarantees, they get low interest rates on capital markets, passing on those savings to borrowers through below-market rate loans. And lastly, as we mentioned, we finally need a real national development bank. Right now, we've just got too many fragmented institutions: the British Business Bank, the UK Infrastructure Bank, and the old Green Investments Bank. Let's bring them all together. One mission, one capital base. A development bank with a clear public mandate to close financing gaps, and the autonomy to act with speed and scale. The British Investment and Development Bank. We will guarantee its bonds through the Treasury. That means it can raise billions on global markets at AAA rates, just like other top-rated public banks around the world. Those ultra-low costs get passed down to the projects. 30-year loans for infrastructure, equipment financing for SMEs, affordable housing investments. This bank also won't compete with community banks. Again, it will work through them. Using the on-lending model, it can provide wholesale funding to the community-style banks, credit unions, or even trusted fintech companies. They handle the customer relationship. The development bank provides the capital, subsidized rates, and risk-sharing tools. That means nationwide reach without a single extra branch. Think about being able to walk into your local bank and be connected to capital markets at a AAA rate. But this bank will offer a full mix of financial tools: low interest loans, credit guarantees for high risk innovation, equity for deep tech and regional venture funds, special retrofit loans for housing based on proven green schemes. This is targeted, flexible finance built to match public goals. And when the next crisis hits, whether it's a recession, a pandemic, or an energy shock, this bank can become a counter-cyclical weapon. It can fast-track treasury guarantees, emergency liquidity programs, rapid deployment of public capital when markets freeze. The private banks will never loan in a situation like this. But this isn't about profits. No dividends, no payouts. Just reinvested capital and built up reserves for future growth and stability. With all these reforms, we can finally start to level out the UK's regional inequality and finally fulfill the government's promise to level up our country outside of London and give our SME sector the support it deserves. But this isn't far enough. How will our SMEs and businesses thrive without a skilled workforce and a fantastic business ecosystem? Tune in next time when we carry on the discussion and talk about incorporating a real chambers system into the UK. Take care, guys.